So what happens when one of the world's biggest tech companies, a giant that honestly seemed unstoppable for years, gets backed into a corner? Well, they don't just adapt, they make a massive, high-stakes gamble. We're going to break down the huge pivot Alibaba is making right now to fight for its future.
This right here isn't just a stock chart. It's the story of a kingdom under siege. I mean, after years and years of just total dominance, you can literally see the pressure building. The market is nervous, and the real question is, how do they possibly fight their way out of this?
Okay, so how did we even get here? To really get what they're doing now, you first have to understand the battlefield, where, for what felt like forever, Alibaba was the undisputed king.
For the longest time, their main business, Chinese e-commerce, was basically a money-printing machine. It seemed completely untouchable. But things have shifted, and fast, and now their market share is slipping.
This slide really breaks down the heart of the issue. On the left, you've got Alibaba's classic model. You know what you want, you search for it on Taobao or Tmall, and you buy it. It's a planned mission. But on the right, you've got these newer players like PDD and Douyin, and they're playing a completely different game. It's all about social discovery, getting lost in live streams, and making impulse buys. They're not just stealing customers, they're literally changing the way people shop.
And look, this isn't just a little bit of noise. It is a serious threat. As this Morningstar analyst report says pretty bluntly, there's no quick fix in sight. The pressure is on, and the old way of doing things just isn't going to cut it anymore.
So, facing this huge threat to its core business, Alibaba didn't just tweak a few things. Nope, it completely reinvented its strategy, betting the whole company's future on two massive new opportunities.
And you don't have to take my word for it. We can hear the new vision straight from the top. The CEO, Eddie Wu, has been crystal clear about it. The future is all about building two powerful interconnected platforms, one for cutting-edge tech and one for, well, everything you could possibly want to buy.
So here's what that actually looks like. They're basically fighting a war on two fronts now. First, they're not just selling things anymore, they're trying to build this all-encompassing platform for every single consumer need. And second, they are doubling down on becoming the absolute foundation, the tech layer for the entire AI revolution.
Let's dig into that first pillar, because this is where it gets really aggressive. They are going all in on what's called quick commerce. You know, the world of on-demand, instant delivery for pretty much everything.
And you know what? At first glance, the gamble seems to be paying off in a huge way. By building this instant delivery service right into their main Taobao app, they saw a massive 25% jump in monthly active consumers. I mean, that is an incredible surge in people using the platform.
But, and this is a huge but, during that same time, their adjusted profit dropped by 14%. So wait a minute, how can you get way more users but make a lot less money?
The connection is actually pretty simple. That growth was incredibly expensive. This is a deliberate choice. Alibaba is burning through cash, sacrificing profits today to get users hooked on instant delivery. They want to own the market now and figure out how to monetize it all down the road. It's a classic tech land grab, just on a massive scale.
All right, now let's talk about the second pillar of their strategy. While that whole e-commerce battle is raging, Alibaba is also trying to build the very foundation of the next era of technology.
So when you hear them say AI plus cloud, don't let the jargon scare you. What they're really talking about is becoming the digital utility company of the future. Think of it like the power grid. They want to provide the raw computing power and the smart AI models that will run everything from the next generation of apps to entire industries.
And you can see right here that this plan is already getting some serious traction. Their cloud intelligence revenue growth just sped up to 26% year over year. And what's driving that? A huge surge in demand for AI products, which, get this, are showing triple-digit growth.
To really understand their commitment, just look at this number. That's 380 billion RMB. We're talking over 50 billion US dollars that they've promised to invest in their cloud and AI infrastructure in just the next 3 years. This isn't a side project. This is a core, foundational bet on where the world is going. And that massive investment, it's already paying off, big time. We're talking 8 straight quarters. That's 2 full years of triple-digit growth in AI revenue. This shows there's real, sustained, and even accelerating demand for what they're building. This isn't just hype.
So you've got these two enormous, incredibly expensive bets happening at the same time. And the big question everyone on Wall Street is asking is it actually working? And honestly, the market is completely divided.
The whole debate really boils down to this.
The bulls, the optimists, they're saying the turnaround is working. They point to the cloud growth and better customer retention and say the market is massively underestimating the long-term payoff here. But the bears, the pessimists, they're pointing to the cold, hard facts. E-commerce market share is still shrinking. New competitors are absolutely relentless, and all this spending is just crushing their profit margins right now. Both sides have a really strong case.
And that leaves us with the final, critical question. Is this two-front war a brilliant masterstroke that's going to redefine Alibaba for the next 10 years? Or is it a desperate, incredibly expensive gamble against new rivals that have already changed the game for good? Right now, only time will tell.